We have our market master joining us. Dipen, Head Institutional Research at HDFC Securities, joins us. Dipen, for the longest time, the Nifty has been between that 8,300, 8,600 mark. Is it that we have to follow the market cues and look at mid-caps, not at the heavies at all?
Good morning, Lata. The last time I was here, I told you we're kind of stuck in a range. For a change, what I'm saying is actually working out.
Okay.
So, I do believe we are stuck in some kind of range, but you know, the beauty about being stuck in a range from an investor's perspective is it gives you a lot of time to think. Think through, identify medium or even, I dare say, longer term themes. Pick your stocks and wait patiently. Instead of, you know, the old adage in the markets was invest first and then investigate. That's the way you chase momentum, right? And you don't really have to do that, which means you are not really running the risk of doing silly things. A lot of the changes, the big violent changes that were supposed to, you know, which have played out over the last year, ever since the government change happened and all that, you know, all those big fluctuations have played out. Now this is the time to do deep down study, take a considered view, and this market is actually giving an opportunity for you to do that. I'm not complaining.
Okay. Dipen, hi, morning. Before we ask you about your themes, I want to ask you about the discussion we were having just before the break about you opening a savings bank account in 6 minutes. Where did you do that, and how are you positioned on the PSU banks now?
So, you know, one of the themes that will play out aggressively for investors, for economies, for countries, and for society at large over the next few years is dramatic shifts in technology. And we keep hearing all these, you know, grandiose articles and columns about how technology is going to change everything. And I've heard this about technology for close to 2 decades now. And it does, much of that has actually played out. But I think we are at yet another cusp of breakthrough changes in technology, because this time technology is not just enabling better operations or breakthrough product designs or more efficiency and so on. Technology is now helping us deliver things to people and to mass deliver services and products to people in ways that were unimaginable even a few years ago. So this morning, while I was having my morning cuppa, I downloaded an app from a bank which allowed me to open what they call a selfie account.
Okay.
And it sounds very teenager-ish, if you know what I mean.
But how did they do a KYC?
So, yeah, so that's the beauty. I'm not sure whether the account is technically open right now or not, but I do have an account number. I took my picture, which is where the selfie account branding comes from, I guess. I took a picture of my IT PAN card and a picture of my Aadhaar card. And they even have optical character recognition. So they picked up everything from there and they actually put it into the form and they said, okay, presto, you're done. And I took 6 minutes because I wasted 3 attempts at taking my own picture because of the lighting.
So which bank is it?
You know, and here's the surprise. So it's what I always used to think was a half dowdy bank, not, I wouldn't say as dowdy as the PSUs in many matters related to customer service. So again, not to take anything away from the PSUs on the virtuous part of their businesses, but so this is Federal Bank. And I was completely amazed. For me, Federal Bank was an old generation private sector bank with so many of its branches in Kerala.
And a buy for you for a while, right?
Of course. So there's a lot of good things that have happened at Federal Bank over the last few years. For me, I think their caution at being reckless with lending at a time they were well capitalized, they're still very well capitalized, stood them in good stead. And the minute they started noticing a little bit of pain on their corporate book, they held that back very tightly. They've got a very good retail and SME book. And from time to time, you know, they come out with small negative surprises on asset quality or one or the other thing, and people are kind of getting impatient about them. But I think to me, a bank like this, offering me a service like this, is not just symbolic on Federal Bank changing character, which is of course a theme that is playing out over a period of time, but I think the entire banking sector, that if an old generation, an allegedly old generation private sector bank has got this thing going and the app works like a dream, then I think there's a lot to be said for how technology can transform our financial lives.
Yesterday SBI opened its mobile wallet.
And yes, so SBI Buddy. Now I will try out SBI Buddy and I will equally vociferously praise it if I find it good enough. But it's not my praise that is going to do the wonders for SBI Buddy, I'm sure. It's what the user experience across millions of users is going to be like. And
so what's in your bank buy list?
So of course SBI is there, but not because of Buddy alone. or not even because of Buddy, because when we've been having a buy on SBI since I don't know when. And like Federal Bank, from time to time it gives us nasty surprises, nastier than Federal Bank, I must say, on asset quality, but I think some of that will change. And maybe we've seen the worst of asset quality, and maybe this government will get its act right in terms of solving the NPA problem, now that they've figured out this thing about putting in capital into PSU banks, empowering them with chiefs who come in from the private sector or even professionally appointed chieftains. I think 10% of the work is done. Maybe 90 is still left.
No, but will you go below SBI into other PSU banks?
So you don't have to go much below SBI to discover BOB.
Okay. So both are your buys?
Absolutely.
Even after the recent 15% jump in BOB shares, you're still comfortable?
So the traders will probably book profits now, I guess. Structurally, it's not the price level that I'm talking about right now. Structurally, if the government takes forward the good work that it's done late last week and figures out a way to solve tackle this elephant in the room, which is the NPA thing, and at stressed assets levels running at well in excess of 10% for many PSU banks. If you figure out a way of setting up the legal structure, the terms of engagement for PSU banks to be able to chase errant lenders, to be able to extract, to be able to recover money that is stuck, to be able to encash bank guarantees, to be able to seize collateral, to be able to run down equity for errant promoters who are misbehaving or who have gold-plated projects. Can this government do it? I'm getting increasingly skeptical, I must confess. But if this government can't, then which one will?
Okay, so that's one theme that you've spoken about, the banks. The other theme that you've been bullish on is the low commodity prices, that the beneficiaries. So some of these paints and branded lubricant companies. Which are the stocks that top your list, and you think that the benefits have not been priced in already?
It's not a question of benefits getting priced in, Sonia, because you will see headline multiples running well in excess of 30, 32, 33x or something for Asian Paints on 1 year out numbers, and maybe slightly lower for Pidilite, and maybe about 20x or something. I don't remember the math for Gulf Oil Lubes and so on. But look at these guys. They have 70-80% of their raw material mix coming in from crude derivatives. Crude is down from $100+ to under 50 or wherever we are now. It's only a matter of time before this begins to reflect in base oil prices, let's say, or in phthalic anhydride prices for Asian Paints. Ditox is down and so on and so forth. And volume growth is certainly not going to be challenged. Pricing power with 54% market share, dominant position, no other player willing to cut prices desperately, nobody pretending to be loss leader, like let's say in telecom, right? So these are stocks to own for a number of years from here on.
Fair enough. Let me come to your what you call long bond stocks, the safe bets. Bharti Infratel and Power Grid, you think they will never lose you capital?
Yes, the reason for that is that so first of all, why do I call them long bond stocks? So they are like, these guys are sitting on fat assets which just deliver cash year after year after year at very high EBITDA margins. In the case of Power Grid, it's actually 95% or 97% or some such number. Now that's nothing to get excited about, because the asset turns that they get are very low also, right? But that's not the main thing. The main thing here is that there is nothing in the business models of these companies, and for different reasons, that threatens these cash flows from growing in a very predictable way over time. So let's say in Bharti Infratel's case, it's the simple thing of 4G rollout. It's the simple thing of more and more towers getting populated, with more and more tenants. So as tenancy rises in a tower, there is disproportionately extra cash flow that is generated from a tower. Okay. And as those cash flows build up over a period of time, and the rate at which you will discount them is a function of what the risk-free interest rate is in the economy. And as interest rates fall, which is my big thesis, or which has been everybody's big thesis for the last year or so, and it's kind of pushed back a little bit right now, but it doesn't really matter. So as interest rates fall, NPVs of these stocks should rise, of a stock like Bharti Infratel should rise. And of course, Infratel I think has more than doubled in the last, year and a half or two. I'm not sure, you'll have to pull out the graph for that. On the other hand, in Power Grid, here is a company which is, so there are two reasons to like Power Grid. One is that their capex and their commissioning is going to get better and better for the next 3 or 4 years from here on. And as their commissioning improves, the net profits which will be allowed to them, their mandated rate of return, 14.5 or 15.5 or whatever it is, so this is going to give them larger and larger cash profits in the business, which will again be redeployed at the same rate. So I'm willing to pay a hefty price to book premium for it, way beyond the 1.5 headline number that you might see.
All right, Dipen, we'll have to let you go on that.